Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts. And so this is pre-market prep for Thursday, May 8th. A lot of exciting stuff to go over. So, I'm excited to do that. And we'll be diving into UVIX in just a second. I just wanted to point out a couple things, or really just one thing about these pre-market preps. I just thought I'd do it last night. In the thumbnails, I will list the tickers that I'll be going over, and I'll be trying to do them in that order. So if there's one in particular that you want me to go over, you can then just kind of scan through. And for example, I don't know if you can see it on your screen, but if you're not interested in crypto, but you're interested in uranium or lithium, you can see that those are listed after the cryptos. So that is when I will be going over them. So I'll try to list all of the tickers in order that I intend to go over them, so you guys can kind of get an idea of what is in this stream. But now coming back to the charts, let's dive into the UVIX, which is pulling back. So the UVIX is the 2x long VIX futures ETF, which closed yesterday at 4180, down about 5.7% on the day, and now continuing down about 4.3%, down almost $2 in the pre-market, down sub $40 a share currently. And I am kind of proud of myself for yesterday, recognizing that not necessarily with the UVIX, but with shorting the S&P 500, thinking that, hey, these signals kind of suggest to me that we're going to see a continuation to the upside in the markets, that everybody is seeming to be a little bit bearish. It's a little too obvious. And so with the markets going higher, the UVIX and the VIX, the volatility index, are pulling back. And so I am glad that a couple days ago I trimmed my small position, had 2 shares, then I just got down to 1 at above 45, I believe is where I trimmed at in the after hours on, that must have been Tuesday. And then we did see this pretty big pullback, a rejection from that yellow line there at 44.42, which corresponds with the low from April 9th. So pretty cool to see that level acting as, some consolidation over here, consolidating below it, and then again, getting rejected from that level. And so I did add back to my position. So my average previously was 41. Since I had trimmed, I bought back another share at 40. So now my average is 40.50. And I will probably continue to nibble to build a little position, or a little bit bigger position, as we do maybe consolidate or trend along this light blue downtrend, which is, of course, the top of this parallel channel, going back to, which acted as resistance following the big move that we saw in August of last year, and then saw the top here on September 6th. That level acting as resistance. Now it might be flipped to support. So really, sub 40, maybe getting down to 30. That's right around this. That is this orange line here, which is somewhat arbitrary. I think that maybe corresponded with a Fibonacci level, but that did correspond with the bottom over here before the big move up. So I think 30 is an important level to pay attention to. So while we are trading around 40, so let's see, let's just get the cursor right around where we're at, going down to 30, that's a 25% move to the downside. But I could see the price getting back up to the red line here at around $55, and that's a 36% move to the upside. So what I will be doing is I will very casually, very slowly be getting my average down if this does trend lower to around 30, even if it goes to 25. 37% move to the downside, and it's a small building of a position. So, not getting, overwhelmed by a drawdown like this, so then I can take advantage of a move to the upside. And really, for most of my trades, I'm just looking for 20% swing to the upside. And, I think that's definitely achievable with UVIX, especially because we do tend to see spikes in volatility on, like a bi-weekly or monthly basis. So, I think that this is going to be a really nice performer in the end. But yeah, now currently I am in the red with it trading in the pre-market at 39.96. Let's just look over at the 10-minute time frame real quick here. And so yeah, I mean, it does look like yesterday into the pre-market just kind of got the float up there and kind of bouncing around yesterday during market hours. Got rejected, like I said, from 44.42, hit a high during the day of 44.99, and really, that kind of makes sense whenever you get to whole dollar numbers. Maybe it pierces it a little bit, or maybe it just nearly gets to that level because maybe some people saw that, hey, volatility seems like it's cooling off. I'll place a limit sell at 45, but then it only goes up to 44.99, and even if there was a limit order placed at 44.99, it may have not been filled. Since there was just that quick wick up to that level, and then pulling back and then consolidating into the after hours before gapping down to a low of 39.80. We will have to see where it opens up at today during market hours, but I suspect we will see a continued fade lower, maybe finding this downtrend as support right around, maybe getting to 36.90. I believe that is the alert that I have set here, just having fun with the 6 and the 9 in there. And yeah, if it does go down to 30, happy about that too. But then let's flip over to the VIX, which is the market volatility index, or the panic indicator, or, I actually forget what it's called. I think it's a panic indicator. And yeah, the market volatility index, the VIX, closed yesterday at 23.55, down almost 5%. Looks like it's consolidating along this orange line right around $24 a share, or 23.76. Just below it is where we closed at. And that does correspond with, let's see, it was a prior high over here, that high from September 6th. So being very similar here with the VIX, that date being the pivot high and just a horizontal line going across there. With the UVIX, I have that as this downtrending parallel. And really, I think that makes a lot of sense because the UVIX is an ETF that tracks the index over here. And one thing that we can see is that there was a reverse split here, 1-for-10 reverse split. And I believe it's because of contango. A lot of these ETFs that track an index or a commodity, they end up fading over time. So rather than having a horizontal line based on this September 6th high, we have a downtrend for the UVIX and a horizontal line here for the VIX. So I think that actually makes a lot of sense. It's kind of a similarity between those two, or how they're different, but how they can relate there. And so that potentially acting as support. But what I would look for with the VIX is a pullback to around 20, maybe to around 18, corresponding with the bottom over here, which was, of course, the 786 from this retracement over here. We did fill that gap to the downside around 1485, so there's not necessarily anything drawing us to the downside, but there might be some gaps. Actually, there is, a gap over here. I'm wondering if I have that marked. I don't have that marked on the UVIX or the VIX, but there are some gaps over here. It looks like there's one. The closing price on April 2nd was at a price of $21.51. So maybe there is a gap that we will fill. And yeah, there might be some other gaps here. Let's see. The close on March 27th was at 1869. And yeah, there's another gap to the downside. So we'll see if we do continue lower. I suspect probably getting to 20. I feel pretty confident in that, but I think that 18 might be another level to be paying attention to. But now let's flip over to the SPY. This is the S&P 500 tracking ETF, which closed yesterday at a price of $561.15, up about 0.4%, but then going up another 1% basically in the pre-market, currently at around $566.60, 70 cents. It's changing around there as I speak. But yeah, it did get a pullback, a near fill of this gap here. But I think gaps, a lot of the times, they're just kind of laid out there as, little lures, baits, traps for people to get hung up on them. Hey, I am going to wait for that gap to fill at $554.54. But the low that we saw on Tuesday was 556.04, and then yesterday the low is 556. oh wait, sorry, it was 558.80 on Tuesday, 556.04 yesterday on Wednesday. And so, yeah, that gap might be getting left behind as it does seem like we are rallying. Where might we find some resistance? 568.38 was the high on the 2nd, so that would have been last Friday. So what we want to see is a close above 568.38. Once we get above that level, reclaim it, I think we'll go higher. And, the SPY here, this is really, and also the SPX, this is what was making me get a little bit nervous about shorting the S&P 500 because we didn't just get a pretty clear rejection. This pullback seemed a little bit weak. And with that, I thought, well, maybe it's forming a bull flag like over here. And so I think the next level, if we are able to get above 569, closing above that, let's say, I think the next level would be around 580, maybe 582, corresponding with that red line, which looks like it was the low from November 6th. 581.68, got that marked there. That is probably going to be resistance because not only was that the low over here, we also saw that acting as support as it did consolidate in this range as it was forming the top. And with that being said, anybody who is buying over here, expecting this to continue to go up before rolling over, that's probably going to be some resistance because those people up. We've now entered into a bear market. I'm grateful to be able to take a small loss or exit at break even. So there will be some resistance there. But I feel like we could be seeing new all-time highs just because we did see a more than 20% move to the downside here. It looks like 21.2% from that top there to the bottom that was hit on April 7th. The top, I should say, was hit on February 19th. That's a definition of a bear market, pulling back 20%. And so everybody has that mindset. But really, when you see the headlines, we've entered into a bear market, this, is potentially going to continue going lower. That's really, the dip buying opportunity, that you see, historical dip buying opportunities are, when there's a lot of pain in the markets. And so, yeah, I could see this continue to go up. But yeah, let's just real quick look over at the 10-minute time frame before I flip over to the SPX and the SPXU. But what we can see from yesterday, we did see kind of a fade into market open, a little bit of bouncing around. Looks like we hit a low during market hours on Wednesday the 7th at a price of $556.04. Believe I mentioned that. And then we did hit a high during market hours, if I can zoom in to that, of $563.82, consolidating into the after hours before gapping up above this previously filled gap level at 564.52. But it looks like we did get a little bit of a rejection, hitting a high of 568, pulling back a little bit. We will see if we can continue those moves higher. But yeah, just to point out that gap that was filled, was the close from April 2nd over here, 564.52. But yeah, let's look over at the SPX real quick, which is, of course, the S&P 500 index. Closed yesterday at $5,631.28, up about 0.43%, which is very similar to the SPY, up 0.42%. And yeah, I mean, really just looking at all the same things here, this consolidation made me think, hey, maybe it's a bull flag. Nearly got to filling that gap there at $5,569.06. The low yesterday for the SPX on the 7th was at a price of $5,568.64. So, hopefully I read that number right. Sorry, it gets a little confusing reading so many numbers. But yeah, that was, about $10 above the gap fill here. It did not fill that. Will potentially be getting higher than the high that we hit here on the 2nd, which was $5,700.70. Let's look for a close above $5,701, and then maybe we could see a move up to here around $5,864.89, corresponding with that level over here, the low from November 6th. And that level acting as support over here as we did consolidate in this range, forming that top just like what I went over in the SPY. So they actually look very similar here. Sometimes they do diverge a little bit, especially when, forming all-time highs or something like that. And actually looking back historically, when we started to make all-time highs in the S&P 500 over last year, I believe, the SPX was not hitting all-time highs, whereas the SPY was. So I think it's just a good thing to be paying attention to whether you're actually looking at the index like the SPX or the SPY. There are the ETF here. There are going to be some differences there. But then real quick, let's look over at the SPXU. I'm probably not going to cover this tomorrow, but yeah, I mean, I had a position in this. I trimmed at a little bit above break even. I made a few dollars on it. But with this, it's like, well, it doesn't seem like we're really rallying up and that this could be rolling over, forming a bear flag, just like over here. And that is what it seems like was and will be happening. So what I might do is just put a line there at 2181. I do have an alert here. Let's see what that's at. I might actually delete the one at 22, but I'll leave the one at 20 just to kind of follow along to see if that does go lower. But yeah, I mean, I am not really going to be paying attention to the SPXU much moving forward. And what I'm really excited about, I think we're all probably really excited about this, is Bitcoin is now above 99,000, almost hit 100,000 overnight. It looks like here in Webull, the high was 99,936.18. So very close there. Could be a topping signal here. The candle has not yet been completed, so we'll have to see what happens. I know that Trump is going to have some announcements, some trade deal that was negotiated with a big notable country. And yeah, but so this could be, a top. And if we do pull back, if we do, let's see, get rejected from up here, if this is a spinning topping signal with that wick to the upside, where might we be pulling back to? So I could see it coming down to around 97. That does look like it's corresponding with the CME gap that was filled over last, or that was created over last weekend, but did get filled on, I believe, Tuesday the 6th. And yeah, so I got that red line there, but I might actually just delete that. Or, maybe what I will do is just move it over here to be, let's see if I can get it lined up there. Let's see, what was the closing price on the first? And that is for the charts in Webull, which are not, the closes and the prices are not as good as they should be. Really, what I want to be doing is looking at Bitcoin in TradingView. But the closing price here was 97,150. Yeah, so I'm just actually going to delete that line. They magnetize to these levels, but sometimes they don't do it that great. And so when I draw a new line, it does seem to work a little bit better. So I'm going to make that line a little bit thicker, and I'm just going to make it green, suggesting that is where I think we could be pulling back to. And since we did not play out like this red or yellow arrow, but we have played out like this green one, I'll leave that one. Actually, no, I'm going to delete it because it's already been played out. It's in the past. And so what I could see happening is a pullback to around 97. And with that being said, we can maybe do a Fibonacci retracement here to see if there are some levels that line up with that. And so the 50% is around 96,600. Maybe I could do the 382 to see where that lies. And yeah, I mean, both of those kind of straddle that 97,000 level, the 382 being at 97,400 and the 50% being at 96,600, right around there. I could see that acting as support. And actually maybe this yellow line here, that was a prior, I was thinking that was a prior high, but no, that's a Fibonacci extension here, going up to 95,000. I think that could actually act as support. Maybe we break below that 50% level there, and that would be corresponding with, all this consolidation here. That could be acting as support around 95,100. So what I might do is just add a couple levels here, just to kind of evaluate, see where they're at. Where's that 618? That's still above that 100% level there. Where's the 786? A little bit below. So yeah, I might just not include those, noting that I only have the 382 and 50% up here. So If we do pull back, I could see 97 acting as support, but if that breaks, I would think the next level is not 96, but actually 95,000. But maybe 95,000 wouldn't get filled if there was a limit order placed there, so I'd look for, maybe 97, 96, and potentially getting to 95, but maybe orders not getting filled around there. So yeah, very cool. Excited about Bitcoin. I think we'll be getting back to above 100,000 very soon. But maybe, really like whenever Trump speaks, whenever there are announcements, we do end up seeing somewhat of pullback. So maybe this is what I could see happening over the next few days. Pull back to around 97, 96,000 before then. Going higher. Wow, that's an ugly arrow, but that is what I could see happening, so I would be prepared for that. Ethereum, this one's pretty exciting. Did get up to nearly $2,000. I've been talking about that level for a couple of weeks now, I believe. And so Ethereum currently trading at $1,960, hit a high of $1,977.52. And we are now above that orange uptrend, which goes back to, I believe, just pivot lows from the past. I forget what years. I'm not going to take a step back on the weekly. But what I could see this going to is around 2,000. I actually have this level here from this 100% Fibonacci extension right around 2,100. And so we're not there yet. We're not yet at 2,000. But I think I could see that happening. And so really, I could see that happening as doodled out here, but not with this pullback to around 1,600. If we do get a pullback, I think it could be like what I have doodled here to that orange uptrend. That would be to around 1,900. And so I'm actually just going to adjust that doodle to suggest that we're going up here, then pulling back, and then going up there. Hopefully this arrow looks better than the Bitcoin one. Very good. I like that. It looks like an arrow. So that's what I could see going on with ETH. And then with Doge here above 18. So looking very nice there. This is above my average. Now my average is 17.4 unless I have gotten that down. I suspect not. But let's see. Maybe this is bumping into some resistance, which it does kind of look like it might be. Let's just do a casual little trend line here. And maybe it's getting into resistance, but maybe that's breaking out. So I think that this is looking pretty good. Let's look for a move up to 20 cents, if not maybe a pullback to around 17 cents. And really just kind of evaluate that. But I think that this is just looking really good. And with that looking good, we can do a Fibonacci extension to see where that 100% move would be taking us. And so going up here to that high and then to this low that we hit on, let's see, the 6th, we can see where that'd be taking us. And I'm just going to adjust this Fibonacci retracement to only include that 50% and then just to kind of evaluate where that 382 is. Yeah, so those were both kind of levels to be adding at. The 50%, which we did not hit, which was 16.1, 16.2. I think the low was around 16,420. So, sometimes these numbers, make you think that we are in a simulation. 16,420. Crazy. Okay, and so that did though pierce the 382 there at, again, crazy numbers, 16.9 or 169 there. So keep that in mind that those numbers do pop up. I think I'm going a little bit crazy with that stuff. Oh, but also the 786 here, it looks like the retracement here from this massive Fibonacci going from that low of 8 cents basically up to 48 cents. And so that is here. Now breaking out higher. But let's see where that 100% move would take us. That Fibonacci extension to around 22 to 23 cents. We will see if we get there. And that does also seem to correspond with the highs over here or the opens and closes of those candles, which for crypto, opens and closes are going to be the same because the market doesn't close. So that would be a level where, I think it's going to go higher than 22, 23. So that's why I'm going to have it as yellow. But I think that there might be some rejection there. And so what I could see happening with this I'll just doodle it out a little bit. Maybe we get a little bit of a bounce back here, but then a move up to here, and then something like that. Let's see how that arrow looks. Very nice. So that is something that I could see happening with Doge. But then let's look over at the next one on the list. I'm just going to kind of reevaluate what I have. Uranium is next. So let's go over there to ticker symbol URA, which is the Global X Uranium ETF. Closed yesterday on Wednesday, May 7th at a price of $26.77, up 1.44% on the day, and continuing higher, currently above 27, up 1.57% in the pre-market. And so we are above where we topped out at yesterday. The high yesterday was $26.94. This is just looking really good, and I think that's on announcement. Let's see, actually read some of the news here. U.S. Vice President J.D. Vance says, "We think there is a deal that would reintegrate Iran into the global economy. Trump administration will seek to speed up nuclear deployment." And Mitsubishi Heavy talks with 200 suppliers to rebuild Japan nuclear reactor. White House seeks to hasten nuclear deployment. And that's what I think the news was that really got this to continue going higher. And so where could I see this going to? I think the levels over here, like the bottoms over here, might be acting as some resistance. So I'm just going to go with the open price from December 20th. That was at a price of $26.87. Got that mark there. Just going to lock that in place, make that line a little bit. Hey, man, we already bumped into that. I was just going to say I think that could be acting as some resistance, but we are going higher than that. So, yeah, I mean, maybe over here, this is going to be around 28, but maybe we start to head towards, so it's not going to be a straight line up. I think that we could be filling that gap, but maybe we do something like that. Maybe bump into some resistance before filling the gap because of that yellow downtrend. So let's see, what would this be taking us to? Right around 28 makes sense. And then getting up to here would be around 30. Also, again, it makes sense. But what I can do, since we did see, move up here, down, move up here, and then down, I can do let's see, Fibonacci extension. And so I'm just going to do it from here down to here. And I might actually clean up some of these levels here because we're above them. And so actually that's still potentially useful. This one, I'm not going to clean up too many of those. This one, I will clean that up because we didn't pull back to it. And this one here, again, didn't go down there. So just going to clean that up. And so what I will do, though, is a Fibonacci extension, which will not be getting us to the highs here. I suspect it will line up with right around $30. We will have to see, though, the 100% extension, which is going to be basically the same distance from the low here up to the top here, that same distance dollar amount, but taking that from the low over here. And so, yeah, that lines up pretty beautifully. Very cool how it works out like that. So I could see uranium continuing higher, maybe a little bit of a pullback in the short term, but I could see this heading up to around 30. And so that's actually really valuable for me because I am holding some Oklo. I did trim out a very small amount a day or two ago, but then I did buy back what I trimmed out, which was just one share. I have 4 shares, I believe. And I just want to be evaluating where I should be taking profits with this. And so looking at ticker symbol URA, the Global X Uranium ETF, makes me think it's going higher. So I think we should relate that over here to Oklo. But I'm just going to clean up the chart a little bit and kind of see what these levels are at. So this, I can remove that 6180 because we did go down to the 786 there. Found that as support. We actually did pierce it. So that 786 was at 1686, hit a low of 1742, and then bouncing up here. And so maybe we get rejected. Yeah, I've got this doodled out around 30, very similar to what I was talking about with uranium. Or URA, but yeah, Oklo so closed yesterday at 27.12, down 5.37%. I think that was, I guess they have earnings coming up on the 13th, so next week. So yeah, maybe a little bit risky to be holding this up and into earnings, especially because getting into earnings right now from the lows here, we're up 55%, and then let's see, currently at 28, right around here. That's around 64%. So getting into potential top, but I think that this could be heading to around 30.90, corresponding with the closing price from March 24th. There's likely to be some resistance there, but I could also see this getting up to this uptrend here that's based on the pivot low from September 9th of last year, 535, crazy, much higher. It has gone up much higher, even hit a high of 59.14, so very nice there. But then the lows over here, the other pivot point, the low from December 16th. That is how I get that uptrend. Did act as, a consolidation level here. And so we could potentially be getting back to that around 35. And so thinking about, really what I just drew up with uranium, that is the extension. Let's see, how did I draw that? That's the lows from over here. So August 5th, I did just do this Fibonacci extension. So August 5th over here with Oklo, this is September, but we can do very similar thing, going from the low there up to the high here. And then where would that be taking us? Spoiler alert, it would actually be taking us to new all-time highs. So if I do adjust that axis, that would be around 71. So yeah, I think that there's a lot of upside potential to Oklo, but that's, I don't necessarily think it's going to be getting there. It's not going to be a straight line. So I'd be cautious with that. But since we are getting close to the hour, I am going to switch over to one that was requested in the comments of yesterday's stream, which was Lithium America's ticker symbol LAC, closed yesterday at a price of $3.07, up 1.66% on the day, and continuing up about 2% in the pre-market, trading around 313. And this one, I actually think that a top is probably in all honesty, although, maybe not. And my thought process for that is we do have this big wick to the upside, hitting a high yesterday of 317. That makes me think maybe that's a topping signal, a big wick up, close lower, although we did close here at 307. Right around where the cursor's at, and that is a higher close. So that suggests that there is some strength there. Also did see an increase in volume as price has been going up. Volume has been stair-stepping up. So that's looking good. But for me personally, what I would do with lithium if I had a position is I wouldn't want to enter here. I think that there's probably going to be a pullback. What I would have done had I been kind of carrying out the strategies that I'm implementing now, trying to look at more swings, I would have entered over here when we had lower lows formed, nearly a gap fill, and the RSI was flat lows. So that is a weak bullish divergence, considering that we saw lower lows in the stock price, flat lows in the RSI. If we would have hit higher lows, that would have been bullish divergence. So this is just a weak one. And so, yeah, that was that led to a rally of, let's see, over 37% or really over 30%. I'm looking for just like 20% swings. So, that is a move that would have played out very nicely. And so what I could see happening with this is, got a lot of levels over here. This one over here, $2.75, kind of, the tops of this consolidation over here effectively did, act as a, nearly getting to that on April 30th at a low of 277.5. And, yeah, so I think that we might be seeing a little bit of a cool off. I do have 285 marked here, which was the highs from August 22nd and 23rd. Did consolidate around there, did find that as support over here before retesting it multiple times, ultimately breaking lower. And yeah, that's just been a pretty notable level. So I could see a pullback to at least 285. But maybe this does continue higher. Markets do seem like they are rallying. To find a level that I think this might be pulling back to, I just do a Fibonacci retracement from that low of 231 that was hit on, let's see, April 8th, and then going up to the high from yesterday, which was at a price of 317. As I talked about, we do see that, let's see, I need to make this, adjust these colors here. So I'll actually make this one a green level. I think that would be a dip buying level down there. But yeah, so this Fibonacci retracement, I will just add, let's see, the 50%, I think that's a good place to start. Yeah, right around there, that level that I just colored green, 274, I could see it pulling back to that. If it doesn't quite get there, though, the 382, also corresponding with the yellow line, pretty cool that those levels are matching up. So those are two levels I could see LAC pulling back to. So yeah, for me personally, I would wait for a pullback to 284 to really consider it. But then before I would probably want to, if I did establish a position there, it would be very, very small. I would wait to get more aggressive to around 274, and that would be corresponding with, let's see here, I'm just going to doodle out my thought process there, but that low would be corresponding with, May 20th, so maybe 2 weeks from now, I think we could be seeing, just like very much so, confluence of levels here. Look at that. So like the 382, it's not that notable of a retracement. 285 being that yellow level there. That was a notable level in the past, but I think we could be going lower than it and seeing this confluence of levels here around 275. We've got that 50% retracement here. We also have that green level that's kind of arbitrary, but just like the tops of this consolidation, the price action here that's going to act as support. People who are buying here will probably buy back if it does dip to that level. Just like the opposite of acting as resistance, going to the upside, this would be acting as support to the downside. We also have this 786 here, which is based on this bigger picture level. That is at a price of 270. So just a little bit lower there, but then also very notable in my view is this green uptrend, which is based on the lows from over here. So the lows from August 5th, and I imagine this is going to be September 6th. Nope, actually September 10th. And we did form a gap there that has yet to be filled. I suspect it won't be because we didn't fill it over here. So yeah, I'd look for a pullback to at least 285, if not 275, before the possibility of this continuing higher. And also too, I was just looking at it in this frame. We do see, just like based on the close over here on the 7th, that was at 309. We got rejected from that level. So yeah, in my view, that is a thick red line. That's kind of a sell level. All this consolidation over here going to be some resistance. And then finally, before I do end this, I just wanted to point out bull. I do not have a position in this, but it's something I was looking at, and this is Webull, ticker symbol bull. This closed yesterday at 16.25. Just something I wanted to point out. I don't usually go on charts that are so new. There's really not that much trading going on over here because I don't think it was publicly listed. But something that I noticed that I think is super cool was the high over here on March 28th was at a price of 1340. The high over here was 1340. And so then I noticed, hey, we did pull back to 1340. I should make that a thick green line because I was contemplating buying it, but it's like, no, it's too speculative. I'm trying not to add more stocks, just trying to, swing trade stuff. But from that level, if I had noticed it, and, I think I noticed it over here when we hit a low of 1309, then on the second hit a low of 1310, could have dip bought at 1340 and then would be up, more than 20% now. So that would have been a really nice swing trade. Mr. Chart Norris has been covering this, and the person that kind of made me realize, I should check it out was Orlando on X. And he was not planning on starting a position. I think this is just too speculative. But yeah, this does seem like it's potentially breaking out here. And so, yeah, even from that level, a 20% swing would be like no problem. That would be 20% swing, very, very not much needed. Getting up to like $20 a share. If this does go back to those levels up here, that's 100% to the upside. So I actually feel like that this is kind of a really nice risk to reward scenario because, from the close here, did go up. It's currently trading in the pre-market at 1671. But if it does pull back to 1340, maybe that's a stop loss. That's risking 17.5%, but with, potential upside of much, much higher, which I would actually think it'd get to around here, given the consolidation over here. And then also this low over here. So that, even right there, that's a 40% move to the upside. So yeah, I think that's pretty interesting, but definitely very risky. So do consider that. And so maybe, I would look for maybe a pullback to 16 and then, bounce like that. But this is a total gamble at this point. I just wanted to highlight that 1340, that's a really cool level to look at. Yeah, I was happy and proud of myself for seeing that. But yeah, I think that's all of the tickers on the list here. So I'm just going to open up the chat so I can see that. And yeah, Hydra Hustla is saying good morning. So good morning to you. I'm going to have a little sip of coffee. And so KC, I'll pull up KC real quick. And then SoundHound. And so let's see, Casey and SoundHound. Okay, so Casey Kingsoft Holdings, I'm just going to look at the profile here, is a holdings company mainly engaged in independent cloud service. It has a market cap of $3.83 billion, so it is notably sized, related to AI. I don't know, this 14, okay, so let's just look real quick. I don't want to spend too much time on these charts just because, I want to get ready for my day. That is a pullback to the 382. Excuse me, so maybe that's something, but it doesn't really seem that notable. 50% would be around 1339. And it does look like, and this is actually a pretty clear, sometimes my parallel channels aren't that clear, but this is just based on the highs over here. So the high from February 20th, and then the highs from March 19th. So that's very easy to draw on, your own chart if you want. It doesn't have to be a parallel channel, it could just be a downtrend. It did get a fake out break above it and then closing below it. So I think that this actually looks pretty weak. And so I would wait for at least a pullback to 1339. It does look like we had this gap over here that was filled. I'm actually going to delete that because it doesn't seem too useful. We do have a gap down here at, let's see, what was the closing price on March 29th? That was at 1242. So I'm just going to make that a dashed thick blue line, so we know that there is a gap that was not filled down there at 1242. Let's see if that corresponds with the 618. So I'm just going to add that up here, move this aside so we can see the 618 just above there at 1277, and the 786 just below there, and that actually corresponds with a different level. What is that? That's the, I don't think that's really too useful anymore. So yeah, I would, let's see, the 382 where we're currently at around 14, potentially support, but I suspect it will break lower. I'll leave that up there just so it's kind of highlighted there. But like I said, yeah, I think that this could be coming down to probably around 13. Maybe it doesn't fill the gap here at 1242. But, that is because it doesn't have to fill the gap. And so what I could see happening is a continuation downside and then maybe going up like that. I don't know how high it would go, but something like that. And so because I don't think that the 382 is going to hold up and, I don't want to get this too cluttered. Hey, that looks to match really well with that doodle that I just put up there. So that is what I could see happening. This pulling back one more dollar to around 13 before going higher. So that is what I would look for with KC. And then real quick, I'll go over SoundHound. And this is one that I do have a small position in. Let's see, I can just let you know what my position is. Let's see, I have 3 shares, very small, at an average price of $9.78. I was thinking about trimming when it was above over here, but it's like, nah, I won't do that, because I have such a small position. I don't have any calls or anything like that, but what I think will be happening with this, I actually have a limit sell at 1025 for my 3 shares, to be honest. I just, realized that, but what I could see happening is, let's actually do a little experiment here from the low here from April 7th, going up to here, the highs here, and then pulling back. Hey, look, 964 is a 100% extension there. Very cool. That acted as a good level to trim or exit at, and then pull back to add a little bit more. So let's do the exact same thing. Fibonacci extension from here. That high of 997, and then pulling back to this low. Let's see where that's taking us. And let's see. Yeah, so I had actually already done that, but I went to this low. We actually got to a lower low. And so that would be suggesting that price, oh, wait a second. Yeah, okay, so that's good. Yep, okay, so I just drew those. Cool. That would be suggesting price could be going to 1139. And so what I might actually want to do, I have not done this yet, and I'm not going to do it live, but I might want to adjust to trim one share at 1025, trim another share maybe at 11, because maybe it doesn't get to 1139, and then, have a last remaining share for 1525. And, I'm not emotional about it, just chilling, just hanging out. But yeah, I think that although earnings are today, imagine after the close, I'm going to have to look over at, let's see, unusual whales here. This is just the max pain data. So let's just look over at SoundHound. Max pain for this week is $9. Next week and the week after, again, $9. So looking over at the chart, we are above max pain, but maybe if with earnings this does go higher, then we could see maybe gamma squeeze start to unravel, and maybe we get up to 1525 to fill that gap, which is the closing price from February 13th. So looking really cool there. Yeah, I am liking this a lot. It does, though, look like there is a potential, downtrend here. That looks like it's resistance. If we can break above that, I think that looks really good. I'm just going to make that light blue so it does stand out a little bit, differentiate it from these levels over here. But yeah, I think that this looks really good. And the data up here, so earnings expected today after hours, and the move that's expected is an 11 to 12% move either to the upside or downside, which is plus or minus $1.13. So good to be thinking about that. And if we do, let's see, contracts, I don't know that I have Sound. I do have a SoundHound contract over here. This is the, looks like, that's Intel, sorry, so I need to click on SoundHound. So SoundHound, $25 call for January 16th. Why $25? That's the highs over here. That's why I picked that one. I don't have that call. Maybe it's one that I want to get into. Maybe it's kind of a gamble, though, before earnings, so maybe I don't. This looks like, there's really not that much data on it. But last traded around 64, 68, 73. Prices there a few days ago. There's not really that much volume on this one, so it's not really a good contract in that sense. But the reason why I like contracts that expire so far out into the future, nearly a year from now, is because, it gives you some wiggle room. And so let's just look at the data over here. Expanding this is the net call and put premium. What we can see yesterday, we saw net put premium going up. So that is bearish. We saw net call premium going up. So that is bullish. But we see the net selling of contracts here. And so that isn't really suggesting too much strength. So that would be suggesting these could be the selling of calls, covered calls, or the selling of cash secured puts, which would actually be bullish. So yeah, it's kind of tough to say whether it's bearish or bullish, although the bear bull indicator suggests it's majority bullish, majority bearish, as you can see there, 51% there on the bear side. And then let's see. Looking at this, let's just expand this, take a step back to the past 7 days. Yeah, so we can see, so a little bit of bullish here. Net call premium increased by 415,000 here, 261 on the 5th, and then on the 6th went up by 359. So yeah, nothing too crazy with this. I'd want to see net call or put premium increasing or decreasing in the millions. Net put premium increased yesterday by 589,000. Over here, it decreased by 500,000. So yeah, it's kind of tough to say. So I don't really think there's too much data here from unusual whales to suggest whether this is going up or down. But I think if we do look over at the chart, I think that, we could be seeing $11 very soon, and that would match. Actually, let's look at this because Unusual Whales is saying, a plus or minus 12% move, basically. So from where we're currently at, let's just look at this. A 12% move would suggest price getting to, around 1025, that level that I have marked. Very interesting there. And then a 12% move to the downside would suggest a price of around 8. So we could do the mental math there. It's plus or minus $1, very easy. So yeah, it will be very interesting to see. I think generally that this is probably going higher. But I'm not getting too aggressive. I'm not loading the boat or anything like that, buying calls or anything such as that. But anyways, with all that being said, I'm going to end the stream, get ready for my day. But as always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more pre-market preps like this. Thanks a lot for watching. Have a great day trading, and I'll see you tomorrow in next pre-market prep. Take care, you guys.